Welcome to the Mortgage Broker Podcast, where we explore everything related to mortgages and the home buying process. If you're a first-time buyer or a seasoned investor, this podcast is for you. I'm your host, Vanessa, the Mortgage Broker. So, let's get to it. Thank you so much for coming in today, Wendy from Boddy Ryerson. Super happy to have you here in our new space. We've just opened it not too long ago, so it's exciting to have new guests come in. If you wouldn't mind telling us about who you are and where you work and how long you've been in the industry for.
Okay, thanks Vanessa for having me, and I love your new space. It's great. It's got a great energy to it. Wendy Newton is my name. I'm a real estate lawyer, a solicitor at Boddy Ryerson in Brantford. I've been with Boddy Ryerson for since 2012, and before that I was with Stats Newton, practicing real estate and solicitors work, wills and estates, that sort of a bit of corporate as well. So my practice is primarily made up of residential real estate, but I also do condominium and subdivision development work, plus wills and estates and corporate as well.
So how have you found these last couple of years, especially in real estate?
Well, since COVID, I think we've all been on a bit of a roller coaster ride. Things took a deep downturn, and then they just took off like gangbusters after that. So we didn't know what the next month was going to hold, so we just tried to keep up with everything and keep our wits about us. Prices went through the roof, and now they seem to be settling down a little bit with interest rates increasing, I'm assuming, is what is driving the slowdown a little bit. And now we're seeing a lot of instability in the market.
Yeah, I concur with that. I know that we're seeing some challenges in the mortgage industry, especially with the rates having increased. It's becoming a lot more difficult for household incomes to afford what they once could in 2019, 2020. But then we're also seeing where the values are coming down. Are you guys finding that there's issues with homes that have been pre-purchased and not closing until a later date, or what is that kind of looking like?
Absolutely. What we're seeing in the last few months, certainly people who have bought expecting that they're going to sell at a certain level or in a certain time frame, and then that doesn't pan out, or they're in a chain of deals where they've sold to someone who themselves is expecting to sell at a certain level, and that doesn't happen either. So in those chain of transactions, we're having deals falling apart, people looking for extensions, wanting to know what the repercussions are of not closing their transactions.
So I know one of the issues that I was coming across, and I think it's something that you guys were probably seeing as well, when, those prices were as big as they were and the market was as hot as it was, there wasn't really any opportunity to put any conditions, right? Like everyone, it was just not a thing that you did. You didn't put in a financing condition. You didn't put in a sale of home. You didn't do all of these things. And there's been some pretty sticky situations that have happened because of it. In the last few months, and I don't know if you're seeing this trend as well, but because we are seeing those conditions coming back on the purchase agreements, would you say that those default rates are a little bit lower since we're seeing the condition of finance and a little bit more protection?
I think we're seeing more. I think it's a good thing that conditions are coming back in, because people can get their wits about them and reconsider their decisions and choices and make sure they're doing what's right for them, and they'll be able to close. I think we're still seeing more deals falling apart than we did before there were conditions and offers. I think when all the transactions were unconditional, there was such a frenzy in the market that there was still a race to the finish line. And then maybe things came to light after the fact, but then it's too late, and it's a lawsuit if you're going to try and sue over something that you weren't expecting in a new home that you bought unconditionally. When we're in a challenging market, we're seeing deals falling apart or things moving really quickly. I think it's more important than ever to work with experienced advisors, whether it's realtors or mortgage brokers, so they can outline different options and guide you through all the different things that could happen and what to do if things do go wrong.
Yeah, I do agree with that, especially like being a mortgage broker myself. I've been able to get a few clients out of a bit of a more sticky situation. where they were once approved maybe with a financial institution where their guidelines are a little tighter, right? They were approved, but now the deal is kind of falling apart and they need somebody to come in that's able to give them more options and at the end of the day close the deal, because if it doesn't close, we're looking at loss of deposit, we're looking at a potential, like the client could be sued, right? So I do agree with that, especially working with good real estate agents too, who are constantly in communication, not just at the beginning to make the sale, but also at the end to make sure that it's going to close.
I agree. And also, I've been really trying to stress with clients that if they're buying and selling the same day, they're really taking a risk. I'm encouraging everybody to explore bridge financing, whether it's for a day or more. You'll save money versus what you'd pay a mover waiting till we can get you keys.
Yeah.
If both are happening the same day, we have no idea when the sale will happen. Then we have to turn around and do all the steps to close a purchase.
Right.
And if your sale's at jeopardy, or if you are in a chain of deals, which we often don't know until the day of closing,
right,
or someone further down the road's in a chain of deals where one deal goes off the rails, it puts all of the deals at risk.
Yeah.
And everyone's scrambling, and it's not a good experience for anybody. It's extremely stressful.
And usually when you say it's closing on the same day, it's usually on a Friday, where nothing can get done between Friday to Monday, and now you're really stuck. So I guess my advice there would be don't close on a Friday, especially if you're in a situation where there's two transactions that need to close simultaneously.
Right. If you have a choice, don't close on the 1st or the 15th, the end of the month, or a Friday. Those are our busy days.
That's fair.
You'll have better luck getting movers, and you'll get more attention, or you'll be in a less frenzied situation at every step of the process with your lender and your lawyer and everyone else you need to interact with.
And I think these are tips and tricks that not everyone knows. So thank you for bringing that up, because now being a mortgage broker for 15 years, I've seen a whole bunch of different scenarios, and yeah, it's always that Friday closing where the money didn't come through on time and now they've got the movers and they're sitting on their front lawn, and I'm trying to do something from my end to now try and bridge the funds on a Friday. Well, you're not going to get any responses, so it makes it really difficult for all parties that are involved when it's closing on a Friday.
And especially if you're doing a refinance, please, please, please don't put that at the end of the month, because all of the deals where people are moving and have to close on those days are going to take precedence,
of course,
at every level because of that.
Yeah. Well, and I mean, truthfully, a refinance, if it is getting that tight, it can be moved. I mean, it's not ideal for anyone to have to change a closing date, but those purchases, they do need to come first, just as they come first normally on my desk when I've got, an offer to purchase with conditions on it. I need to make sure that that's getting secured before the refinance is coming through. So
right.
They've already got their home.
Yes, that's true.
They can wait.
Yes, fair enough.
With not having the control over what could happen at the time of purchase, I know that there are some things that you can put in place to kind of protect you once you do actually achieve that home ownership.
Yes, so we're seeing, I think that would apply to title insurance, and we're seeing probably in 99.9% or 99% of our deals are title insured on the purchase end, for sure. The benefit of title insurance being it gives you protection against title fraud in the future. So that's something we can't protect our clients from going forward. We can do everything we can at the time of closing to make sure everything is good. We do our title insurance, our title search, and all of our due diligence. But going forward, it's fairly new. It's a high value fraud where someone steals your identity, transfers title to their name or someone else, or gets a new mortgage and is gone with the proceeds before you realize what's happened. And then the lender comes knocking on your door to recover on their security, sell your house out from underneath you. So there's nothing we can do to protect that on a go-forward basis. Title insurance does provide that coverage, though. So we recommend it in every situation, even if there is a survey, which is how deals used to be closed before title insurance came along.
Well, and truthfully, I mean, if people are purchasing homes for I mean, the minimum right now seems to be around that 500,000 mark. Title insurance, roughly the cost.
For a purchase at 500 with a mortgage, you're probably looking around $300, $350 in that range. It's graduated based on the purchase price and based on the amount of the mortgage as well. So the more you pay, the higher the policy is. And then there's also different levels of protection as well. You can get a market endorsement that gives some coverage to for future increases in value as well. So if that's important to you, make sure you discuss that with your lawyer.
That's actually something I didn't know,
Yes.
but very beneficial for
sure, but
for any
additional
homeowner,
cost too.
right? But when you're looking at the value of your home and really what you could be losing for the cost of that insurance, it's kind of a no-brainer. It's a one-time fee. It's not an annual fee, correct?
That's right. It's a one-time fee paid at closing. And I always tell my clients, like any insurance, it's great until you need it. And then you have to see what is actually covered and what they'll do for you. So they do have some, title insurance does have some options in what how they'll respond to any particular loss, whether it's tax arrears or construction done without permits where the municipality requires it to be taken down or rectified. They have some options in how they address that and how they fix it.
Okay. And so if someone did need to use the title insurance that they put in place, what would that process look like?
Usually we'll hear from them first, although everybody does get their title insurance policy from their closing package, and there is make a claim sections on all of the title insurers' websites, so they will walk you through the process too. So we'll suggest clients can get in touch with the title insurance first, but we're also there to help them or support them if they need to have some questions or need some help through the process.
Just to kind of guide them through the verbiage if it's not quite
correct.
Clear.
Or if they're not sure what the title insurance company is looking for, what they're asking for, or don't have it at their fingertips, we usually will.
So I know, like in the media, we hear about we hear about title fraud. We hear about these situations. How close is it to home right now?
I haven't heard of it happening in Brantford specifically, but I expect that it likely has. We hear about it happening in Toronto, maybe because it's a bigger market and more media coverage on that sort of thing. It's certainly not uncommon for it to happen, and we're seeing it's hitting more properties that aren't owner occupied. So if you have a property that you're listed on Airbnb, or if you're trying to sell it yourself privately or rent it out, then the fraudsters will grab those pictures and listing information and that sort of thing and represent that they're selling there or they're living there or they're getting a mortgage there or selling it.
I never even thought of that, but that makes total sense that all of that information would be on those websites for them to go and pose as the seller.
Right, and then they get
That's quite scary.
They get fake identification, and since COVID, this sort of fraud's really taken off a lot more. Some law firms were completely virtual, and some still are. So they're not meeting face to face with clients to get that feeling of whether they're dealing with someone legitimate or not. They're not getting as good a look at the ID as they might face to face. And we actually have some new changes coming in the new year. As lawyers, if we're meeting virtually with the clients, we have to take additional steps to verify their identity through Treefort or another software provider, an independent verification process.
And so these law firms that are using more of a virtual process, are they kind of relying on the lender and the broker and the real estate agent to verify the identity?
I think they would usually probably get a picture
Okay.
of the ID and maybe have the person hold it up again during their meeting through video. Beyond that, I'm not sure who's actually doing that final good check of their identification.
So at Boddy Ryerson, you guys are very much so still having clients come in, sit down, do the appointment, making sure everything is by the book.
Yes, we are. We prefer in-person signing. We do have virtual options. We have a program for processing that, but then we're a little more attuned to the fraud issue as well and trying to be more careful. If it's someone we haven't dealt with or someone from out of town, how did they come to us? Was it a referral? Do we know who they are? Is there anything else unusual about the transaction? We still prefer to meet in person with our clients. It's easier for everybody, and it's nice to meet your client and sit down with them and talk about what's going on in their lives and their transaction.
Yeah. Well, it creates more transparency, I think, between everyone who's involved, right?
Right. And not everybody is up to speed with the technology. If we have some clients that aren't really attuned to it, then it can be challenging to get through the process.
Well, I am finding, I mean, during the pandemic, and I know we keep going back to that, the pandemic, but I mean, it's a real thing and it happened and it's still somewhat happening, right? Like there's been a lot of changes that'll keep going forward. But I found that most of my clients, they wanted everything virtual and signature through, online means. And now that everything's kind of opened again, it's like, oh no, I'll come and see you at your office. I'm like, this is so nice. Mm-hmm. Like I get to see people again.
Yeah, as interesting and slick as it is to sign people virtually, it is still nice to meet with people face to face. It is a different experience, certainly.
Well, and I think that's probably why both of us started in the industries that we did, is because it was very like people facing.
Yeah, relationships.
Yeah.
Meeting people, learning their story, being entrusted with all of their personal details, and helping them what it is all about at the bottom line, I think.
I agree.
Mm-hmm. So Vanessa, I have a question for you.
Okay.
We get mortgage instructions once it's all finalized and set up with you and the clients. I'm just wondering the process you go through in picking a lender for your clients.
Well, it is kind of an extensive process. The biggest thing is doing an initial call with the client. So kind of going over all of the details of their income, where they work, how long, if they already own a home, if they're looking to purchase a home. There are different types of mortgages. So there's insured, there's insurable, and there's uninsured. So depending if it's a purchase and they're putting down less than 20%, I would be looking at a certain lenders that client would fit into. If we're looking at a borrower that has more than 20% down but doesn't really fit inside of like that perfect bank box, I would be looking at maybe alternative lending options for them. So if they are business owners is a big one. So if they own their own business and they're writing down a lot of their income, but they have substantial cash flow on a monthly basis, we can use an alternative lender for that. I typically work with anywhere from 8 to 12 different lenders. We have access to 50, but I am very big on creating relationships with my referral partners, with my lenders, because I think it goes a long way. So if you're really honing in on specific lenders, they're going to go the extra mile for you, and you're going to go the extra mile for them. So where I may not get an exception because I'm getting the lowest rate with one lender, I may be getting a better exception for 0.05 on a rate, but otherwise they wouldn't have been approved. So it really comes down to a case-by-case basis. And it's really a detailed process of like taking all of the information, making sure that I haven't missed any information to decide exactly where I would be placing that client.
Interesting.
Yeah. And then, there's that whole other beast, which is private mortgages. So our licensing actually is it's changed a little bit. So now we have different levels. So we have mortgage agent level 1, level 2 with private lending, then mortgage broker with private lending. So it's a little more structured, where once you're licensed as an agent, you can't just do any and all mortgages. So very specific, but being able to offer even that as an extension of my business to my clients has been very instrumental, especially in the last year, because we've worked on a couple of files where things were a little bit dicey, and there's situations where you have to do a vendor take back. There's situations where more needs to be put down as a down payment. Where's that coming from? Just being able to offer more options than what I could before.
For sure, where you have to get creative and then know where to go with that. Definitely.
Very creative. But still inside the lines.
Right, of course, yes.
Lending itself is a very gray area, or a very gray world, but keeping inside the parameters, but still being able to offer those options is key in my business.
Yeah. And I found this from the time I started practicing. You're only as good as your name, so you have to make sure where the lines are and stay within them.
So part of our process is making sure that the client has a lawyer, and if they don't have one, then we do give a couple of names. We start at the top and kind of ask them to work their way down. But once that referral comes over to you, what does that process now look like from then to the finish line?
Right. So once we get a transaction, whether it's a purchase, a sale, or a refinance, we'll first identify where that referral came from, whether it was clients reaching out to us directly or with one of the partners that we work with. And then we'll make sure we have the contact info for the client, and we usually ask for email address as well, because we have questionnaires that we're always refining for things that sort of collect all the information that we need from the clients and walk them through the process and let them know what to expect in the process. So first of all, gathering their information, taxes, mortgage information, dates of birth, spousal status, whether they're a first-time home buyer, that sort of thing. If they're on a sale, then we need to have their property tax information, mortgage reference number for any existing mortgages, residency status, all of that good stuff. That's all covered in our email as well. And then we get the file open. We order a search of title on a purchase or do our preliminary searches. If there's another lawyer involved, if it's a transaction like a purchase or sale, we reach out to the other lawyer. We get their documents and information, get the file all ready for closing with mortgage documents if it's a purchase. And then we set the clients up for signing, usually in the week prior to closing or the week of closing is when it all comes together. And I know that seems maybe sort of last minute for clients, but we have to interact with so many different parties in our transaction, putting the deal together, that often none of it's all come together until the last few days before closing. So that's not unusual. That's sort of how the process goes.
Yep. And so within our process, I know that you've received like the emails throughout the process that we send over to your office so that you know kind of where we're at. Okay, we've sent over the instructions and now everything's been signed off on, and now can you let us know when it closes? But part of that is letting the client know that they're probably not going to get a call until a week before closing.
Right. So we will usually reach out to them immediately when the deal comes in, just to say we have your deal, and send our email out to them to say, this is what we're going to need and this is how it will look, and we will meet with you in the week of closing. But in the meantime, we'll be working on your deal as much as we can as information comes in.
And is there anything that our office could be doing that would make things easier for you?
Well, I guess I would say if there are payouts or information, that sort of thing that the clients have had to provide to you, oftentimes a lender will ask for it again from us at the end of the process. So if you have it, send it along, and also just let the clients know that don't put it away or be prepared to update it just in case we have to revisit that with them again. It's not anybody dropping the ball, it's just there's a lot of different partners working together and repeating and make sure everything's covered at the end of the day.
Oh, I know. It's kind of like, everyone kind of has to come together at the end to get that deal over the finish line, right? Like You've got your lender, your broker, the lawyer, the title insurance, and it's all happening simultaneously.
That's true. I think our job is sort of like a quarterback to see it over the finish line at the very, very end.
Yeah.